Watch video 18 on Chapter 4, Legal and Regulatory Framework from the Workbook for NISM Series 5A, Mutual Fund Distributors Certification Examination, and review the multiple choice questions and answers. 1. What year were the SEBI, mutual funds, regulations first introduced? A. 1980. B. 1996. C. 2001. D. 2010. Answer, B. 1996. 2. Which of the following markets is regulated by the RBI, requiring mutual funds to comply with its regulations? A. Stock market. B. Real estate market. C. Money market. D. Derivatives market. Answer, C. Money market. 3. SEBI regulations for mutual funds aim to control risks taken by whom? A. Investors. B. Fund managers. C. Trustees. D. Auditors. Answer, B. Fund managers. 4. Mutual funds must transfer purchased securities in whose name? A. Fund manager. B. Trustee. C. Mutual fund scheme. D. SEBI. Answer, C. Mutual fund scheme. 5. What is the maximum percentage of a company's paid-up capital a mutual fund scheme can own? A. 5%. B. 8%. C. 10%. D. 15%. Answer, C. 10%. 6. A mutual fund scheme cannot invest more than what percentage of its total NAV in debt instruments from a single issuer? A. 8%. B. 10%. C. 15%. D. 20%. Answer, B. 10%. 7. What is the maximum limit for investing in unlisted non-convertible debentures, NCDs, as per SEBI guidelines? A. 5%. B. 10%. C. 15%. D. 20%. Answer, B. 10%. 8. Mutual funds are prohibited from advancing what? A. Securities. B. Loans. C. Dividends. D. Equity shares. Answer, B. Loans. 9. Which of the following is not a restriction for mutual funds when investing in rights or INVITs? A. Maximum 10% NAV in units of a single issuer. B. Maximum 5% NAV in units of rights/INVITs issued by a single issuer. C. No restrictions apply for index funds. D. Maximum 20% NAV in any issuer. Answer, D. Maximum 20% NAV in any issuer. 10. According to SEBI, mutual fund advertisements must always include which of the following? A. Celebrity endorsements. B. Detailed technical jargon. C. Standard risk warning. D. Unverified testimonials. Answer, C. Standard risk warning. 11. What is the standard warning that must accompany mutual fund advertisements? A. Invest at your own risk. B. Returns are guaranteed. C. Mutual fund investments are subject to market risks, read all scheme-related documents carefully. D. Mutual funds always yield profits. Answer, C. Mutual fund investments are subject to market risks, read all scheme-related documents carefully. 12. Mutual funds must not advertise which of the following? A. Projections. B. Accurate performance data. C. Previous returns. D. Expense ratios. Answer, A. Projections. 13. Open-ended debt funds are required to maintain a minimum of what percentage of their corpus in liquid assets? A. 5%. B. 8%. C. 10%. D. 12%. Answer, C. 10%. 14. Which type of funds must invest at least 80% in equity and equity-linked securities? A. Debt funds. B. ELSS funds. C. Balanced funds. D. Sector funds. Answer, B. ELSS funds. 15 mutual fund schemes are prohibited from owning more than 10% of units issued by which entities? A. REITs and INVITs. B. Nifty 50 companies. C. Commercial banks. D. Pension funds. Answer, A. REITs and INVITs. 16. Which of the following is a key principle for mutual fund advertisements? A. Include exaggerated slogans. B. Be concise, clear, and accurate. C. Use celebrity endorsements. D. Highlight testimonials. Answer, B. Be concise, clear, and accurate. 17. SEBI prohibits mutual fund advertisements from using what type of language? A. Legal terminology. B. Vernacular language. C. Simple English. D. Misleading or exaggerated language. Answer, D. Misleading or exaggerated language. 18. Which entity is responsible for ensuring no funds are parked in the short-term deposits of a bank invested in the scheme? A. SEBI. B. Fund manager. C. Trustee/AMC. D. Investors. Answer, C. Trustee/AMC. 19. What is the maximum percentage that a mutual fund scheme can park in short-term deposits with commercial banks? A. 10%. B. 15%. C. 20%. D. 25%. Answer, B. 15%. 20. What is the restriction for investing in equity shares by a mutual fund scheme? A. All investments must be in private companies. B. Investment is only allowed in unlisted shares. C. Investments must be in listed or to be listed shares. D. No restrictions. Answer, C. Investments must be in listed or to be listed shares. 21. Celebrity endorsements are allowed under SEBI guidelines under what condition? A. They are for a specific mutual fund scheme. B. They are for the industry level, not a specific fund. C. They promote returns. D. They are used for branding and AMC. Answer, B. They are for the industry level, not a specific fund. 22. Which investment limit does not apply for government securities or treasury bills? A. 10% NAV limit for single issuer. B. 15% NAV limit for short-term deposits. C. 5% limit for REITs. D. 20% NAV limit for a debt portfolio. Answer, A. 10% NAV limit for single issuer. 23. How should mutual fund schemes disclose dividends in advertisements? A. As a percentage of the investment. B. In rupees per unit along with face value and NAV. C. Only in NAV terms. D. As a percentage of profits. Answer, B. In rupees per unit along with face value and NAV. 24. SEBI guidelines mandate that performance advertisements for mutual funds must include what for funds existing for more than 3 years? A. CAGR for past 1, 3, 5 years, and since inception. B. Only the most recent year's returns. C. No data for funds older than 3 years. D. Returns adjusted for inflation. Answer, A. CAGR for past 1, 3, 5 years, and since inception. 25. What performance metric must mutual funds disclose for a standard investment of 10,000 Indian rupees? A. Return on investment, ROI. B. Internal rate of return, ER. C. CAGR and point-to-point returns. D. Expense ratio. Answer, C. CAGR and point-to-point returns. 26. SEBI's guidelines on unauthenticated news prohibit market intermediaries from encouraging or circulating what type of information? A. Government data. B. Rumors or unverified information. C. Verified news. D. SEBI approved reports. Answer, B. Rumors or unverified information. 27. Which of the following is allowed for mutual fund advertisements in terms of language? A. Complex legal language. B. Biased terminology. C. Standard risk warnings in vernacular languages. D. Exaggerated slogans. Answer, C. Standard risk warnings in vernacular languages. 28. What should advertisements for mutual funds avoid using to prevent misleading investors? A. Simple language. B. Unrealistic assumptions. C. Clear warnings. D. Financial facts. Answer, B. Unrealistic assumptions. 29. SEBI mandates that advertisements for overnight funds must not reflect what? A. Current performance data. B. Unrealistic or misleading future performance. C. Annualized yield for 7-day returns. D. Data about fund managers. Answer, B. Unrealistic or misleading future performance. 30. What restriction is applied when mutual fund schemes invest in listed securities of a group company of the sponsor? A. 5% NAV. B. 10% NAV. C. 25% of net assets. D. No restrictions. Answer, C. 25% of net assets.